So, yeah, let's crack on. Emma, who have we got today?
Well, we've got a very exciting guest for you all today. So Ruth Healy is a financial director at the FD Centre. She's also our financial director, which was how we got to know her so well over the last couple of months. She's been an absolute fantastic addition to the Signal team. Ruth has lots of experience working as financial director for startups, medium-sized business, high-growth businesses, and 50 million plus businesses. But she says that she would much prefer to work with the startups. And in fact, she's taken 3 small businesses from turnovers under $1 million to 10 million plus. So we're absolutely delighted to have her on her team. We're delighted to have her with us today to talk about financial health check for your business. So come in, Ruth, and welcome.
Welcome, Ruth.
Hi.
Morning. Thank you for joining us.
Morning. How
are you? You feeling good?
Yeah, very good, very good. Ready to go.
Ready to go. So, yeah, we'll hand you over to our lovely community now. We'll be in the sidelines, so don't worry if anything technical goes wrong. But yeah, handing straight over to you, Ruth, and then we'll join you back again, as we said, for Q&A. I just wanted to remind everybody that when Ruth shares her screen in presentation format, there is a line down the middle that you can drag back and forth, so you can either make the presentation smaller and Ruth bigger, or vice versa. So have a little play with that in your view settings. Brilliant, Ruth. Well, over to you, and we'll see you shortly.
Okay, thank you. Right, thank you, everybody, and good morning. As you heard, my name's Ruth Healy, and I'm a part-time portfolio finance director with the FD Centre. Let me just share my screen as I'm going. Here we are. Let's start this. Okay, and the FD Centre is a group of 250 highly experienced finance directors across the UK, working with small and medium-sized businesses to bring our expertise to help you on a part-time basis and for a fraction of the cost of employing a full-time FD. I know myself that having worked in small businesses, it's rare that you need a full-time FD, but often you have to take one on because there's no other alternative. So we're the alternative. So I'm here today to talk about a suggested way of taking stock of your business. We've all gone through a year, or more like 18 months, haven't we? The like of which we never have imagined. If someone was asked in 2015, where would they be in 2020? I'm quite sure they would not have got the right answer. We've had a massive shock to our economy, our businesses, and our fundamental way of life. So now's a good time to stand back and think, what next? Some of you may have had a torrid time over the last 18 months. Others may have had their best years, but either way, it's good practice to try to outline what you see in the future. Now, I'm sure you've seen, excuse me, you've either seen this graph or one very like it previously. The vertical axis here is the things that really matter to you. You know, why are you in business? What are you there for? And then the horizontal axis is the time. And where the whole thing is about, where do you want to be in 5 years' time? And presumably you want to be up here with the gold star, perhaps exiting at some point or doing whatever, but this is your ultimate aim. But there is a saying that is, if you always do what you always did, you'll always get what you always got. Too often we imagine that if we keep plugging away at the same old thing, somehow the outcome might be different. But it doesn't work, does it? And what happens is you end up following this more of the same line down the bottom, never nearing your gold star. So how does finance help you on this journey? Well, what we do in finance is to really get the basics right, to get the operational side of the business singing. The reporting, the cash flow, the basics, the things that stop you sleeping at night. And what happens once you have those things right, well, then you can start to think more strategically, because it's the strategic changes that are going to get you ultimately up to the top. But it's daunting, isn't it? There is an argument that now is the time to make changes if that's appropriate. Perhaps you're at rock bottom, having used up all your reserves in 2020. Perhaps you're like one of our people on today who's starting a new business. but something's got to change. Perhaps you've gone the other way, and out of adversity has come opportunity. Opportunities to diversify that you thought might never happen, or indeed you'd never even dreamt of. The world has changed so much, hasn't it? It's put new ideas in our mind. But the question is, do you go back to what you did before, or has the pandemic changed your business and new avenues need to be explored? And then there are the specific things about the pandemic that still have the power to rock your business, and we have to be very conscious of them. What happens when furlough ends? Can you afford your staff to come back full time? What happens when you have to start paying back the bounce back loans? And not to mention, in the middle of all this, we had Brexit. Who could have forgotten? Are you an exporter importer? Do you want to be? How has your operation changed? And how does it need to evolve to stay on your journey to your end point? So this is to take you through a checklist so you can start to answer some of those questions, though there are a couple of thoughts first. Quick question, what does your finance team look like? Your finance team is the group that can support you in change, support you in managing your finances through what will continue to be, I'm sure, a challenging year in 2021. And that can help you make the most of the bounce in the economy that we're promised. So do you have a finance team at all? Or do you have a backroom service providing payroll, payments and monthly accounts? Or do you have a key business partner helping to develop the strategy to drive future growth? We found when this question has been asked before, these were the results. So quite a considerable number don't have a finance team at all. Perhaps they outsource it. Some have people doing payroll, payments and monthly accounts, in fact, the majority. And then a much smaller proportion have this key business partner that can help you with your strategy. The other thing I would like you to think about is, are you the visionary or are you the operator? Where are you starting from? I want you to think about your role, because what I've realized over my many years of working is that if you're doing something you love or you're inspired by, then you'll be far better at it. So I have a couple of categories here for you to think of yourself. Are you the visionary? You started the business, you had all the ideas. I want to be in this product, I want to be in this channel, this geographical area, I want to achieve this. You had all the excitement. Or are you more of an operator, using someone else's vision, but you get things done? It's not a black and white question, this, there is a scale. Maybe you started off in that visionary space, but then you've been sucked into the day-to-day of operations because there's nobody else to do that. And of course, this year, that's probably more likely to have happened than any other time. So the question is, are you in the space you want to be? Because there's no point in starting a journey if you're sat in the wrong seat. Getting so involved in just making the business tick over that you don't have the time to stand back and see the wood for the trees isn't going to help anyone. So the questions for you to think about: are you doing everything at an operator level? You might like that, by the way. There's no judgment here, but you just need to make sure that all the other things are considered by somebody. Are you the visionary, but actually you're stuck in implementation problems or lots of problems? You're in the mire. Or are you the visionary and you're loving that space? Where do you think you are on that spectrum? Are you doing what you really want to do? Are you getting the excitement and therefore the effective results? Here's what we found previously. There's a lot of people stuck in the operator level, and that's okay if that's where they want to be. Think of a university professor, for example, that's designed a new product. Do they actually want to be running a business and finding all the people to sell to, or do they want to be developing the product? That's perfectly okay, but they need to have someone who's doing the visionary element. You need to have a balance. Maybe the visionary people, the ones in the middle here, stuck in implementation, is often the ones that are the most upsetting in a way, because they're not doing what they really want to do. You really want to be driving the business forward, but you're stuck in all the detail. The good news is, if you recognize that that's where you are, then you can have a plan. Or there's this small bunch of people that are the visionaries, that are in that space and they're loving it. Just have a think about where you are. And the reason for setting out this context before moving forward is for you to think about what your role is and where you want to be and some of the key things to do. So let's look at more granular detail now. And this is what we use in the FD Centre. It's called our 12 boxes, and it serves as a good checklist for you to work through. I'm going to build this as we go along just to illustrate it for you. We have 3 layers, and the first is the business support level. These are things that really need to be done. We talk about compliance these days. It's something you've really got to get right, or there's a big fine. Are you up to date with your paperwork? Is there new documentation, compliance that you need to get your head around, for example, after Brexit? With regard to Brexit, by the way, have you reviewed your European-based contracts if you have them? Do they still satisfy UK GDPR regulations? Do they satisfy UK law? It may not. It may have been based on European law. It's worth digging them out and checking. Tax planning and legal issues, things that can save you a lot of money by doing well, but also can cost you a lot of money by not doing well. This last year may have raised a number of queries for you. Have you made losses this year, which as tax losses can be utilised against future profits? When you come to review budgets and forecasts, which we'll talk about later, this is a significant factor. Or have you diversified and in doing so developed a new product? Might this product qualify for research and development tax relief? It's worth checking out, as this can be free money, and it can be a lot of free money. The amount of tax relief you can get for something you've already spent money for is 130% against your tax bill. It's really worth looking at. And even if you're a loss-making business, you can get a check back from the revenue. So do check it out if you've got something new. And legal issues, check your contracts, as I said, but also your company documentation and governance documents. Are you thinking, you know, what is that gold star, that end game for you? If it's an exit, say now or in the next 5 years, start thinking about the paperwork that a prospective purchaser will want to see. And when a prospective purchaser comes in, what they want to see is a track record. They don't want to see that you're just fine now. They want to see that you've been fine for the last 2 or 3 years. They want to see that you have had board minutes, for example, or management meeting minutes, or minutes of decisions that then you have actually achieved. So you can show that this isn't just a 9-day wonder, this is an ongoing successful business. Start to think about putting that paperwork. And sometimes you look at businesses and think, oh, really, do I need all that paperwork? It is really, really invaluable when you get to a point if you want to sell. So start putting that in place. Outsourcing, we've talked, haven't we, about your finance function. Do you have one, or is it outsourced? Is it doing what you want? But also, is outsourcing the way to go for your business moving forward? Has the last year shown you that employing all the people you had before is not viable, or is perhaps more risky? Perhaps you got into difficulties because you had too many people that you needed to furlough or sadly make redundant. So moving forward, just query that. Is it that perhaps a part-timer is better? You know, the one thing that's happened in this world, and particularly for women, dare I say it, I'm going to bang the drum for women, women have been asking for flexible working for years and years and years and years, and it's never got anywhere. Now we have a pandemic when actually flexible working suits everyone, and the women have got what they want. So maybe just talk to your employees, talk to the people that work with you, and just see, do they want to be working 5 days a week anymore? Or do they want to be part-timers? Start to think about your employee profile and your outsourcing profile. And then banking and funding. It oils the wheels in the business, and it's important to have a key relationship with your funder. You may have found out this year that that key relationship isn't or hasn't been what you thought it might be in adversity. That's a common theme amongst our clients. So consider whether actually this is the right place to be. It does feel a little bit scary to jump ship from one banker to another, but you know, they're providing a service and the service has to be right. Additionally, a good finance director, bit of a plug here, will help you talk the language of the funders and perhaps help to free you up from having to deal with the banks if it's not your thing. One key point here is that any COVID funding you might have received, almost certainly you'll have to start repaying capital and interest on that loan fairly soon. So have you assessed the impact of on the business of that additional outlay? Now, the operational skills, the systems, the foundations, and we saw earlier in the graph showing the impact of getting these things right. Internal systems. Have your internal systems and processes been tested in the last year? My cousin actually is a managing partner of a large structural engineering company, and they discovered right at the beginning of their pandemic that their systems could only cope with 1/3 of their people being at home at any one time. They spent 2 weeks running around like goodness knows what, trying to make this work because of course everybody had to go and get home. So have your systems gone through that sort of eye-opening moment? Have they been tested? But also, have you discovered that things that always worked well don't work when half your staff are furloughed, or more than half your staff are furloughed? Or indeed, have you discovered that they work better? Has technology opened up new ways of working that you will adopt moving forward? Working from home, using Teams, listening to finance webinars. Is that going to change the way you work? Can it change the way you work? And therefore the processes that you adopt? And of course, all this has a finance focus that I'm talking about. There are HR focuses, employment focuses to the same issues here, but what I'm looking at is focus. So then the knock-on effect of this is this actually going to save your company money? Does it mean you don't need to have to rent those offices that you thought you were going to have to rent because you can work differently? So reporting, this is about the biggest thing. This is the thing that takes you from A to B, A to Z. This is the thing that enables your business to grow. Do you have the management accounts reporting you need? Do you know or have the KPIs you need at the time you need them? There is a definition I've used a lot, which is a definition of information, and that is it's processed data that enables the end user to make an informed decision. Do you have the right information at the right time over the last year, or did you have the right information over the last year that enabled you to make the right decision? Did you really know where you were making or losing your money? Which products, which sectors, which channels? I often go into companies and find that the MD either has no decent financial information or has so much that he or she doesn't know where to look. Many times, stripping information back, there's a tendency to think, oh, I need loads of it. I need everything. Give me everything. Just dump it on me and I'll have a look and see what I need. It's really unhelpful because all you see is just a load of data. So often the times that stripping the information back to key bits of data is much more useful. Less is more is often a good guide so that you can make those key decisions around pricing, markets, products, and so on. So work out for yourself, what is it that not only that I need, I absolutely need to know, whether it's my sales, whether it's my pricing, whether it's what's happening in the external market, whatever it is, what is the information that I absolutely need to know, and make sure you get that on a regular basis. Finance isn't all about cost management and saying no all of the time, although very often as a finance director, you often get looked at as though you're just going to say no. People believe you're just going to say no. But a really good finance team will be able to add to the profits of the business and improve profits in lots of different ways. This is a key part of a finance director's role, working with the business to identify new opportunities, new ways of fundings, new markets, and so on. And we'll look at this in more detail a little later, because perhaps you haven't got a finance director and there are things that you can do definitely to improve your profit just by making very small tweaks. This is a key part of the growth of the business, and also the finance director is a key strategic advisor to the entrepreneur. So then the last on this row is cash flow management. We can't forget that, can we? It always has been and always will be king. And I'm sure you've discovered that over the last 18 months. It's a key facet of the business, and producing cash flows that are integrated to the business, not just standalone and go out of date as soon as the ink is dry, is really important. Just consider, have you got one of those cash flows? Have you got one that looked okay and then something else happened 3 days later and you think, how did that happen? Have you not got one at all? It's really important to get a decent cash flow set up now. You can start with a monthly cash flow, but if you're in a fast-paced business, then working towards a weekly one makes sense. And the thing that happens if you have a weekly cash flow, what you learn over time is that you learn whether your predictions are actually sensible, whether they actually do come to fruition, and you learn to be better at predicting. So if you've got a marker that says, this is what I think is going to happen over the next 3-4 weeks, and then you look back and see what did happen over the next 3 or 4 weeks, from that you can learn moving forward. So updating a cash flow now is critical, so you can see the impact of furlough ending, you can see the impact of the bounce back loans coming on stream, and so on. And by the way, when we're talking about cash, did you defer your VAT for Q1 2020? And if so, have you applied to pay the balance in instalments? Some of you may have already paid it back, but if you haven't paid it and you apply by the 21st of June, then you'll be able to pay it in 8 equal instalments rather than one go. So just check. So what about the strategic areas? If we can get the operational points sorted, this will free up time and money to work on what's really important. We have these other 4 boxes in relation to the strategic area of the business. What is your strategic plan? Do you have one? What are the activities that go in there? And how do we break down your journey over the next few years? You know, strategic plans can be enormously complicated. And I was involved in one about, I don't know, 6 or 7 years ago that was 400 pages long. And frankly, it was useless, because who the heck was going to read 400 pages? But it's important to have one. And very often now businesses are talking about a SOAP, which is strategy on a page. And even if you just put down, what do I want to do? Where do I want to go? What's my purpose? What am I trying to achieve? Just write it on a page so you've got a reminder for yourself of, this is how I want to get to where I'm going. So is it an exit that you're moving towards? Is it succession? Or do you want to go on forever? Do you love it so much? You have to have a plan. So this is the time to create it if you don't have it. Have your ideas of the business changed over the last year? They may well have done. You may have found new markets. You may have developed new products, as we've said. Are you going back to what you were doing, or are you going to change? Are you excited by the new stuff? And this is the time to create a budget if you don't have one, or review it if you do. It's good practice to create a budget that you hold on to and use to compare, and a forecast that is updated as you go. So 2 separate things. It's also good practice to create 2 budgets. One that shows where you're aiming for. So that's your target. That's where you'd like to be. That's really your gold star. And another that shows what might happen if you don't quite get there. Now that's quite critical, because if you don't quite make what you want to make by, let's say, 5%, the knock-on effect on your cash can be significant. It can be much more than 5%. So it's very worthwhile putting 2 in place to have a look. Your budgets, by the way, should be budgeted profit and loss and a budgeted cash flow. They're not the same thing. And as we said before, cash is king, and knowing the impact of a decision on your cash in ample time to manage the situation is invaluable. If you don't already have a budget, make this your first task and don't kid yourself. It doesn't help. So, risk assessment. Most people used to roll their eyes at this, of course, and think it'll be okay. But then what have we had recently? COVID and Brexit. This is the time to work out that some of the key potential risks in the business and having a plan. And maybe a bit of a war chest contingency plan is really valuable. Those businesses that had something in that area probably survived and got through COVID a lot easier than those who are living on their uppers and never had free cash flow to help them. I wrote that and then I thought about it afterwards and I thought, well, actually, maybe nobody did survive. You know, nobody had a plan for COVID, did they? But however, it's worth trying to have a plan. So it's happened once. Don't let it happen to you again. Think of anything, think of any potentials and put in place a plan for dealing with them. The timetable for your journey is really important. Breaking down a journey into shorter steps is the best way to get anywhere. You know, break it down to the journey, have the steps, have the target for that small bit. Did I achieve it? No. If I didn't achieve it, then change your plan moving forward so that you can catch up. If you did, it's a wonderful way to pat yourself on the back. And Emma was talking before, wasn't she, about, you know, people getting together and being able to celebrate success. Well, this is a way of actually on your own celebrating a little bit of success, saying, woohoo, I made it. I got to the end. Plan the next few months or the next couple of years and constantly review as we move forward out of 2021. As you know, to grow the business and scale the business, you might need a different sort of funding, what we call strategic funding, private equity or venture capital. The language here is massively different to that of a bank manager, and the rewards and the risks are scaled up significantly. So you need to be working here with someone that has been there and done that and understands the language so you can be helped and protected from the rigors that come with this source of funding. A client said to me the other day that, which I thought was quite nice, it's slightly boastful to say this maybe, but I'm going to pass it on. And he said, I bring rigor to his hope, which I thought was quite a nice way of putting it. So this is the great checklist for you. Are you getting all this from finance? You might reappraise your answer to the question we asked at the start as to how you view finance. And maybe you thought you were getting everything you need, but now we have these top 4 boxes. Are you actually getting that? If you're not getting it, who's covering it? Somebody has to. So this is the first part that has set the bigger picture, the checklist for your business and asking you to think about your role. What are you doing? Are you excited about the business? And have you got the right people about you to develop those new products, those new markets and channels to get you to where you want to be? We're now going to look into more granular detail, more impactful detail, but it also fits into the 12 boxes. We're going to look at a key piece of work that will help you make some real improvements to your profit, your cash flow, and the valuation of your business. We're now going to focus on operational aspects of financial management. I'm now going to introduce you to the 7 key levers in your business, or at least the 7 key financial levers. This, as we said, is about having the right systems, processes, and reporting of performance, the right and timely information for key decision making. It's about getting under the skin of your numbers. Where are you making money? Where are you losing money? Which customers are profitable? Which products are profitable? The purpose is to identify opportunities for improving profitability, cash flow, and ultimately the value of your business using 7 key levers. There are others, but let's focus on these. And I'm quite conscious that finance may not be your thing. It may not be what you feel good at or comfortable with, but perhaps these things can help just break it a little bit down so you can think about things in tiny bits. So first up, pricing. Whenever I've mentioned this to a client, I'm met with a look of horror and dread that any price increase will lose business to the competition. That may be the case, but think through first, do you have a commodity product or a premium product? If you're a premium product, then a price increase may reinforce that. Excuse me. Also, what has happened in the last year? Did you raise your prices in 2020? What are your competitors doing? Reviewing your pricing and how you calculate your prices. Is it still appropriate for your business moving forward? Have you found over the last year that customer base is spending different, or a new customer base rather, spending differently, online, for example? Second, volume. Any business looking to grow in the medium to long term will need to increase its sales volumes. Geographical, new products, new channels, and that can take time and money through marketing, development, and so on. Short term, however, you can include short-term promotion activities, but don't forget your team. Your team is a sales opportunity as they talk to others. Ensuring a selling culture through the business makes a huge difference. Cost of goods sold. This is an exciting area for finance directors. Imagine if you can make a small saving every time you produce that widget, develop that product. Over a year, that can add up to something significant. Your team can get involved at every point in your business, identifying opportunities. It doesn't have to be just you looking for new ideas. Get your sales and marketing team to understand what customers want or value. Are you trying to sell them something that they don't want? Your sales team can tell you, so you can change what you do. Are you producing the bells and whistles that the customer doesn't appreciate, which of course is ultimately costing you money for no gain? Do the value analysis between your different teams and work out what is the optimal solution. And going back to supplier contracts, dig them out. Can you renegotiate? This is a really, really good time to renegotiate. Is there a chance of a discount from your supplier? Oftentimes, I found there are discounts to be had just for the asking. You know, suppliers have said to me in the past, I wonder when you were going to ask me. What suppliers need is how much you're going to buy from me this year, if you can provide it. If you can tell them that, then discounts are very often available. It's worth asking, and as my mum said, nothing ventured, nothing gained. That brings us to another area of savings in costs, overheads. The first thing I do as an FD when I work with a client is to take a deep look into the overheads. What are the activities driving costs? Where can we eliminate those costs? Where can we automate, save, do differently? Any change here goes straight to the bottom line profit and including into your cash flow. The great thing about being a finance director of a lot of different types of businesses is, of course, you can very often cross-pollinate ideas from one business to the other, which brings in a different way of thinking. It's a little bit more difficult if you're on your own, but perhaps as you're talking to people in the hub, that's where you get new ideas. That's where people say to you, well, why are you doing it like that? And maybe there's an idea to think, well, why am I doing it like that? Perhaps I can do it differently. So technology, particularly in the last year, has changed enormously, and I would suggest will continue to do so. How can we take advantage of that to automate some of our processes, to do things more smartly, to cut costs in our overheads? It isn't just that we're making use of technology. The technology companies have driven their R&D faster and further than they ever imagined in this last year because of the demand. So now the capabilities of technology is so much greater than they used to be. So find out whether there's something you can do. So these are the 4 key levers that will impact your profitability and cash flow. And I'm now going to focus on 3 other levers which are more focused on cash. Cash flow, as we've said, is the lifeblood of the organisation, so really important. So the first one is debtor days. This is the time between dispatching goods and receiving money, and the idea is to shorten this period as much as possible. An active finance team or credit control function can play an enormous part here, And we'll see later the impact of making very, very small changes in this area. Often, for example, contacting a customer a week before the due date of an invoice is useful, because then you find out, have they got the invoice? Have they processed it? Is it online? Are they ready to pay it? If they haven't got the invoice, are they waiting for a credit note? All these things you can iron out before the due date. But even before the sale is made, think about your negotiation and trading terms. Is it possible for some of your customers to pay by direct debit? Does it make sense, and as in the case of long-term contracts, to negotiate progress payments? Are you in a business where you have to lay out a considerable sum of money before you get money back from a client if you're buying materials and so on? So therefore, negotiate payments in advance. You shouldn't have to fund their end product. It's often the case that smaller businesses feel they can't push a bigger business to pay their bill. I was in a design business many years ago, and I kept being told, oh no, we can't ask, Cable and Wireless was our client at the time, we can't ask them to pay them any quicker because we might lose the contract. It's a common theme. Cable and Wireless don't care. You're talking to the accounts department, you can put them under pressure. So do push them. Push big businesses. Make sure you're ringing on the due day and saying, where's my money? People don't do that because they feel that they'll rock the boat, they'll lose the customer, but you don't. The big business expects you to put them under pressure. So do. It's your money. Don't forget, and also don't forget that no one will pay you if you don't issue an invoice on time. So make sure that happens in a timely way too. Stock days. And many of you may not be in stock businesses, but however, in many companies, we've found an enormous amount of working capital and cash flow tied up in stocks and work in progress. This is the time between receiving goods or stock, or the raw materials for production, and the time between incurring costs of manufacture and making the sale. In service industries, it's the time between paying your staff and dispatching or invoicing the customer for that product. And this is an area where you can really, really get teams working together, a bit like cost of sales. So your production and operations team are looking at the process of delivery and saying, how can I do this in the most cost-effective way as possible? And sometimes that means setting up the production line and doing long production runs to really reduce that unit cost. The problem with that is that you're building stock. You're using cash and working capital to have product sat on the shelf. Procurement team, they're also focused on trying to reduce the unit cost of components and materials. And one of the ways they can do that is buying in bulk. But again, you're stuffing up the warehouse with stock, incurring cash and working capital. Roll in your sales and marketing teams. They know what the customer wants. They can take a look at the future market. What does the customer want over the next month or 3 months? What's the outlook and the demand looking like? It's often the case that people think, well, if I buy in bulk, it will be cheaper, it will be saving the company money. But if you're then paying rent to rent a storage warehouse to put all this stuff on the shelf, it's not saving you money. So let's start bringing your sales and marketing team into the thinking of our production, operations and procurement and start to schedule more effectively. It's your FD's role or your role to bring those teams together and look at what are the most economic order quantities and production quantities across the whole business, the end-to-end, beginning-to-end journey of your business that minimizes your use of cash. Equally, are you a service business working on projects for clients? When do you bill? Are you building up work in progress that needs to be invoiced? I've often found businesses, and I've worked for businesses, where they might have finished a piece of work at the end of the first week in the month, let's say, but they don't bill until the end of the month, as that's when the invoicing routine is performed. In that scenario, the client has had your services, but hasn't been asked to pay for them for more than 3 weeks. Invoice when the work is finished, not just at the end of the month. And at the end of the month, issue an invoice for work done so far, a progress payment. Excuse me. And then finally, The 7th key lever, creditor days. It's similar to debtor days in that the longer you leave it before paying, then the more you improve your cash flow. Now, I'm not saying that you don't pay suppliers, as that can create other issues and damage your reputation. Excuse me. But you would be amazed at how many companies we work for where the finance function is paying invoices as soon as they receive them, without any regard for when invoices are due. So we would recommend you look at all your supplier invoices, and no invoices should be paid before they're due. But even before that, before you do business with suppliers, negotiating prices and terms of trade is key. Excuse me. Will the supplier give you 30-day terms, or would they give you longer? Don't assume the answer is no to that question. Again, if you don't ask, you don't get. Excuse me. So these are your 7 key levers that will help you improve profit and cash flow. And it's important to say at this point that this isn't a list of quick wins. It's very much a case of working on small incremental changes on all levers over a longer period of time that can make a significant difference. Now, I'm going to share with you a case study. It is a bit of an extreme case study, I agree, but as we go through, but let me just share with you so you can see what I'm getting at. This is a real company. The name's obviously been changed, that the FD Centre has worked with. As you can see, in the year before the FD Centre became involved, this company was extremely profitable, and a nice position to be in, with a profit of over 4 million. The problem was it was burning cash at a huge rate. You see that 3 million overdraft. We took a look under the bonnet and identified this isn't, all these figures here are an impact of a 1% change in all our key levers, or in these cases, a 1-day change. So this 1% change in the key levers could improve the cash flow in this business by over £1 million and increase profitability by £924. Now, this is obviously dependent on the drivers in that particular business, but as you can see, these 1% changes were enormous. 1-day change on the debtor days brought in £115,000. Just a tiny change. So we spoke to the owner about this, and the response was fairly classic. He said, if I increase my sales volume by 20% here, surely that'll improve my cash position. But as you can see from the slide here, that actually a 1% increase in sales, this 130,000, I've lost my cursor, would cost the company 43,000 in cash, given the working capital dynamics of the business. So increasing the sales volume rapidly often will require working capital funding. And in this particular case, a 20% increase in volume would cost this business over 800,000 in working capital. It just wasn't an option. So we looked into this business further, and we identified other opportunities across the 7 key levers. And the net result of that work was a £2.1 million increase in profitability, sorry, down here. And more significantly, a 3.8 million increase in cash, transforming this business from a cash consumer to a cash generator. As you can see from the slide, a key contributor was a change in the company's pricing. It's important to say here that this wasn't a case of just increasing prices. There were a number of customers in this business that were price sensitive, which led to the volume reduction you see here, that 130. But there were others that hadn't had a price increase for a while. They were more focused on reliability and quality and were happy with the change. So we worked through the different consumer groups to come up with the right pricing policy. And of course, an increase in price does not attract any increases in costs, leading to improvements straight to the bottom line. Another major contributor to this turnaround was in debtor days. Some of the debtors, again, here there were a number of different customer groups with different payment terms. Some of the debtors were cash sensitive. They enjoyed their trading terms and they didn't want to change. But there were others that weren't particularly cash sensitive, were happy to pay a little earlier. Some of the repeat customers we moved over to direct debit. And obviously, combined with a robust credit control policy, we made a net change to this cash flow of £1.7 million improvement in working capital. But what does this all mean? What's icing on the cake? That has to do with the valuation of the business. That has to do with what you want to achieve at the end, the gold star. The impact of all this work on the value of the business was 10.4 million down the bottom here. At the time we started, the business was effectively in a negative equity position of over 300,000 as a result of this enormous debt in the business. Now the business was worth over 10 million. It's important to say at this point that this was only the operational stuff that we did. We hadn't got into the strategic stuff, but this gives the company the sure footing on which to build its strategic plan. Clearly, this isn't a normal situation, but hopefully you can see that taking some time to look at each of these areas can significantly improve your profit and cash, often by making the smallest of adjustments. It's worth taking time, go through each one of these, have a look. Is there something you can do? I'll guarantee there'll be something you can do on debtor days, and I will guarantee there's something you can do on creditor days. So just check, just go out, ask people, get people on board, talk to them and see what you can do, see what you can change. So in conclusion, there's a lot to take on board here this morning, but I hope it's been of some help to you as you move forward over the next 12 months or so. The key takeaways I would say are prepare a budget or review the one you have and be honest. Don't be overly optimistic. Bring some of that rigor in to your hope. Definitely create a cash flow if you haven't already got one. This is utterly critical. And remember, a cash flow forecast is not the same as a profit forecast. And then look at the 12 boxes and the 7 key levers. I'll guarantee there's something that you can do to improve your business, to identify those areas of improvement. So I hope you've enjoyed this. I hope it hasn't been too long for you. And I'm happy to take questions if you have any. Thank you.
Brilliant, Ruth. Thank you so much. I've got loads of notes. Really, really good. Thank you. It's so great to have it broken down into such a simple form. Often you can become quite bombarded with everything to do with finance, and having it broken down into the 12 boxes and the 7 key levers really kind of simplifies it and certainly makes me think, oh, actually, yeah, that's quite good. I could do that. So yeah, really well done. Thank you. That was really good talk.
Good.
Yes, thank you for the case study as well, because it just brought it all together as a great and very clear explanation of what some really robust financial sort of health check can do for a small business. So yeah, it's amazing. It must be a great feeling to be able to help somebody like that, to literally turn a company around like that.
It's extraordinary. It's the best thing. It really is the best thing to be able to take somebody from you know, struggling and not sleeping at night. That's the thing. You go into business because you're passionate about the business, you're passionate about making those widgets or whatever it is that you're doing.
Yeah.
And you end up not sleeping because you've got this awful debt, or you've got this awful, and you're just worried about anything, and who do I talk to? So to be able to do those small changes, and there is, I can't stress enough the talking to other people, talking to the bank manager, talking to your suppliers, talking to your customer. Everybody wants you to succeed. Nobody is trying to get one over on you or do anything. And if you're honest, you know, there was a time back in the recession a few years ago where we were really properly up against it. And we went to all our suppliers and said, we're not going to pay you for 90 days. And every single one of them said, yes, but you have to pay me on 90 days. And that's the balance. You have to have that contract. You say, look, I can't do it, but I will do it that day.
Yeah.
And we got through, and it's amazing how much people are prepared to support you if you only ask. So that
You mentioned at the beginning that it's really important to be honest with yourself. There is absolutely no point in kidding yourself or pretending it's not happening or trying to make it look a little bit better or anything. Yeah, you've just got to front up, haven't you, and make that phone call. Yeah, so yeah, really interesting stuff. Is it time to bring everybody else in?
I was going to say, let's bring everybody else into the room so we can say hello and they can join in the conversation. So brilliant. Gareth will do that. Get everybody coming into the room. There we go.
Oh, it's such a big topic, isn't it? Finance and business, but it's so important that everybody who runs a business understands the fundamentals. I just don't think you can successfully run a business unless you're prepared to take the time to grasp these things that we're talking about today.
Do you find, very briefly before we start the conversation, do you find people overlook finances quite a lot, Ruth, in small business?
All the time.
Yeah.
And it's mainly because it's not their thing, you know.
Yeah.
Of course, I go into a business and the first thing I look is the profit and loss account, but other people go into business and look at their sales or look at their people or whatever it is, which is their thing. And that's understandable. And that's why really we try to break it down into small bite-sized bits, because it isn't your thing. It isn't why you went into business. Yeah. If you were a finance person, you wouldn't go into the business you're in, would you? So yeah, so it happens frequently. So it's just to sort of try and help and hold their hand and make it slightly easier.
Yeah, I think also by having it broken down into those really small chunks, it's doable. So I'm sure everybody here with you. Good morning. Hello. Lovely to see you all. Nice to see all your faces.
Good morning.
Good
morning. Yes, welcome. Does anybody have any questions to start off with for Ruth? Are you all finding your finances are running completely smoothly and you've got loads of cash in the bank and everything's fine?
Well, mine's a bit different, but I'll come back to that later, being a startup, but I'm sure you've been there before. You had to be. That's
yes. Have you been in business before, Elizabeth, did you say? Have you been in business before and now you're starting up again, or have you come into business for the first time?
No. This is new. I remember a few years back checking you out, but I hadn't started a business. So now it's all new, and yeah, I got a lot of work on to make it happen. What I have is a horse-drawn dining carriage. And
okay, lovely.
Different. I brought the carriage over. It seats 12 people. You clip-clop as you dine, and brought it over from Australia, where I run it as a hobby business. And now I've got to do it really right. So I'm very excited about it. And we're getting out of lockdown, so I have to make it happen. But hi, everyone.
Lovely to meet you.
Welcome.
Thank you.
Welcome. And what are you doing for funding? Have you got funding in place? Are you self-funding?
That's where I've been putting some of the time. I funded bringing my carriage over and realised it's a big carriage. And I funded, and I've got my VAT back because I did the right thing of setting the company up so that you know, that was neat to get that back, $5,000-6,000 pounds. But now it looks like I've got, I want to be able to advance quicker. It's not just age and whatever, it's just the fact that if you can do it well and you can be where you want to be quicker, that's why I'm really going for funding. Looks like I have some success, but all the banks are so busy, even if you're using a broker. I should know, otherwise I've got money at a higher interest rate, but I'm trying to get it at something I think is, but of course I'm using a secured loan, so I'm using the property, my property, husband's property as
Can you share any insight into that, Ruth, as to what the best is, like as a pure startup, as to which best routes to go?
There are a number of banks that are more supportive of startups, like banks like Metro Bank and people like that. Some of the newer banks are a bit more supportive of startups. Some local banks, you know, going to the the normal everyday high street bank. Lloyds at the moment in our area, certainly down towards Southampton, the southern part of Lloyds Bank is doing very well, and HSBC is also quite supportive. But going back to what I was saying earlier, the key for the bank is your presentation. You know, there was a client I worked with, a startup, a few years ago, and they couldn't understand why they hadn't got funding, and they were going to the bank that they've been banking with for years and years and years and demanding that they should have funding, and the bank was refusing them every time. And it was because they didn't have a forecast that stood up to scrutiny. You know, because the bankers are not, they're not passionate about your business. They're there to make money, and they will tear your business forecast to bits. So that's absolutely the key. So if you can go into a bank with the passion, but also with the proof that says, this is it, you've done your market research, you've put your figures together, then you've got a far better chance of getting a decent amount. The other thing that banks like to see, and what typically I would do is actually put a proposal document together in which is the forecast. So you have an executive summary that will say, this is my business, this is my passion, this is what I'm trying to achieve, this is my journey. You know, give a bit of blurb about yourself and what you're doing, not just your numbers. And tell them, and also bring into that what you've already put in. What they like, what banks like, is they like to see, as they say, you've got skin in the game. So you're not just going to the bank and asking them to finance your business, you've also financed your business. That's key. So put a little pack together which tells the whole story. And as you, Elizabeth, were saying, bring it over from Australia. I think you said, tell that story. Say, this is what I've done to make this business work, so they know that you're properly engaged with this business.
Very good, excellent. Yeah, done some of that, but I like the way you put it as a proposal. I didn't, you know, you've got to be careful of your credit checks and things, not to go to too many. But I found that when I was starting the business up, to have it as a company in October, would you believe the banks that I've been with for many, many years, I couldn't open a business account with the pandemic. I went to, and I must promote Starling Bank. So I've never heard of them. I think it's a brilliant bank. It only works through your mobile, basically. I mean, you can go online, but it's absolutely brilliant. And I had to show a lot of stuff to get a business account, but without that and showing, I wasn't able to get my VAT back for bringing the it was so important, you know. Yeah, that's funding everything else.
Which was the bank you said?
The Starling Bank.
Starling, yes, yeah.
A lady. And, yeah, it is very good. Because, I mean, no bank wanted, you couldn't get through, and you couldn't do it online. TSB, Barclays, Lloyds, nobody would let you open a bank business account. So anyway, I thought it was good. Thanks.
Yeah, the Starling Bank, I went to a webinar actually and listened to the lady that started it. And yeah, really, really inspirational and really in touch with what's going on in the banking world and really down to earth. So yeah, good choice.
Well done.
I wonder if it was because it was a woman that started it. I'm not going there.
Hi guys.
So yeah, it's really, really good. Another thing that you did say, Ruth, which really struck with me is sort of your internal systems and how certainly I know at Signal how we changed lots of systems that we did during the pandemic and how adaptable we were to the change of that. And I think often in business, you get sort of stuck by your systems that you use and you just keep doing them, and then to change them, it takes a long time. But with COVID, it taught us, you know what, you've just got to flip, you've got to turn, you've got to pivot, you've got to do it. And I think we've all learned, well, we certainly have all learned from the fact that if something's not working, review it and fix it and change it, and you can do it quite quickly and get the results quite quickly. So there's some definite learnings to be had there.
There are definitely. I work with a charity, which is a women's charity, and we have an annual conference, which is most often based in the UK, but every so many years part of our charity is in Asia and part in Caribbean, so we'll have a conference over there occasionally when we're going abroad. And we have 1,000 women at this conference, and Or
Some might call that a jolly, actually, if you're going to the Caribbean. But anyway, just saying.
No. And anyway, so between 1,000 and 1,500 women are at this conference. It's a 3-day conference, and it's always face to face. And some years ago, we were saying, well, why can't we live stream this conference? Why can't we? Because we've got members who are, as I say, over in Asia, who can't possibly afford to come here and join in, but we want them to join in. Why can't we? And everybody's saying, oh no, we can't do that, we can't do that. Well, guess what? We had an online conference last year, woohoo! And we had 2,000 people at it, and we had people from Nepal there, and we had people from Bangladesh there, and you know, the whole thing changed. And now we're having another virtual conference this year. Next year will be face to face with live streaming. So it changed things. So definitely, and it pushed us because we had no other option. We couldn't meet face to face, and
exactly.
Then actually, it's quite doable. So,
yeah, I agree. Has anybody else here in the room changed any of their process or anything as a result of COVID, or just as a result of a bit of an audit of what you do? Has anybody got any experience in that in the recent months? Come on.
Everyone's very quiet today.
We did quite a dramatic change in terms of that we couldn't go on site in Algeria to commission a grease manufacturing plant, and it all had to be done by email correspondence and WhatsApp, video clips being sent back and forth. And the plant is running, so it was successful.
Yeah, it's interesting. You probably wouldn't have thought of doing that a few years ago, would you, John?
Got off.
Oh, we've lost your
audio, John.
Yeah, my audio is definitely on, but we've got an unstable connection.
Oh, I see.
Coming and going. But no, before that, we would have said, no, you've got to be on site because there's stuff that they won't tell you about unless you're there.
Yeah.
And that still, I reckon, that remains a situation. But what we've proven is that in an emergency,
we can do it.
Yeah, in a force majeure situation, we can do it remotely.
Yeah.
And how is your cash flow, Fiona and John? Because I know you do a lot of work with developing countries, and you must have to invest up front before you get paid and so on. How does that work for you?
Oh, quite difficultly, really. At the moment, it's okay because we've got sort of residual left over from previous projects and a bounce back loan. But in the past, because we do things project by project, we used to have to borrow about halfway through for paying the suppliers. And we were paying, the lender was charging us about 3.5% per month, and running it from a moment of agreement, not from a moment we needed to borrow the money. And as a result, they have made more money out of our projects than we have.
Yeah.
So we've got to find a way around that. And I checked their online reputation, and nobody seems to say a bad word about them. And, you know, we talked to our accountant, he said, well, you just got to choose more carefully who you borrow money from in the future. But you know, when I look back on this, and the way they got paid was that all the money from the customer had to come to them, and then they would have a residue to us. And this was partly because the last 2 grease manufacturing plant projects we've done were done via letter of credit, and we couldn't get money in advance. Before that, when we did our first grease plant we did in Qatar, they did progress payments all by electronic transfer, so we could run cash flow positive.
Yeah.
So these are the sort of conundrums we've got to deal with going forwards from now.
Can we bounce that back to you, Ruth? Have you got any insight into that situation?
What I've done in the past is, provided you can get a guaranteed contract for the project that you're doing, there are some people who will lend against that specific project, that we've been able to get specific lending against that particular project. But it's rare, I have to say. So it is difficult. And it is all in the negotiation with your client in the first place about what you get up front. But as I understand, it's a difficult area to manage. But it's getting, as I say, getting an agreed sign on the dotted line contract with a buyer is helpful if you're going to a bank and asking for funding.
That's something you do, John, Fiona?
What we do is we do a proposal, and they then usually do a purchase order against that proposal, and that forms the sort of written contract.
Yeah.
We try and avoid getting a third contract document drawn up in case it clashes with the other two. Try and keep everything consistent, so there's no contradictions.
Yeah.
But we're now getting more business in Britain, which means that
It'd be easier.
yes, proper progress payments.
Yeah.
Well done.
Thank you.
Thank you.
How about you, Liz? Well, how do you manage your stock? Was the information on stock interesting? Do you own any of your stock, or does it belong to other people and they sell it through you?
No, I curate artisan products. One of the key things is when you talked about sales volume, for me it was I need to sell a lot of my products are small price points. So what I did look at is products that were at larger price points, because otherwise I was not going to make profit. So I need to sell a lot of small price points, but they all add up. So I had to review the product mix. So in the end, I reviewed the product mix last year, and I took a risk in increasing, I guess, the cash cow really by bringing in a product range and dealing with a supplier from overseas, which has worked out quite well, but it was a risk, and I've done quite well with it. But it's those little things. I have to sell volumes to make a profit, especially if I've got overheads. So it depends on the different venues. So I'm sort of branching out. I rent in a shop. So there's 4 of us that rent a space within a shop. And then I've just taken a venture with the Signal studio. So I've got additional overheads, and so the product mix is really important in those areas. So I've got to need to replace stock for volume. Otherwise I'll make a loss. So it's kind of that balance, but also dealing with the supplier. So when I took the venture on with the bigger range, they gave me 90 days. So they which was brilliant. Because I bought a small amount with them. I started small and paid on time. So they thought, oh, she's a credit positive. I said, I don't know, who knows in the pandemic. But anyway, so it's kind of, and I've just linked up with them. It's about networking. You just really have to keep.
It is.
I'm about, actually, you prompted me today, because I think, oh, if they could give me an extra week, that would really help my cash flow. So, because they want me to order more, and I actually, because I'm suddenly, it's just exploded in the last week, I just think I'm going to take that risk, but we don't know with the pandemic. Do you know what I mean? It's really hard to balance.
It is.
That's my biggest thing. And because I'm not used to retail, I've had my business now for almost 2 years. I'm still learning, and the pandemic's been in the middle of it.
Yeah, it's a long time.
So yes, I think it's sales volume versus cash flow versus, I guess I'm the visionary really, and it all, the operational is a bit, I'm really balancing. I'm doing it all.
You're doing it all. Yeah, you're in that middle line, aren't you?
It's part-time. It's not, So, and I love it, but it's sort of, it's a balancing act. I mean, the next couple of weeks are just crazy with extra things going on, fairs. I'm doing I've got lots of fingers and lots of pies to kind of see what works best.
It's probably just keeping an eye on the cash flow forecast.
Absolutely.
Making sure that do you do it weekly or do you do it monthly? Because I know Ruth said either or. What do you monthly or daily?
I do it weekly.
Good.
And in the shop that I share with the 3 others, I do it every 2 weeks, because if we don't, just things fall by the wayside. It's like the little bills that come in, something, I don't know, we had to pay for some flowers outside the other day, for the shop. So that's another price, like it's all those incidentals that you don't you've got to have a slush fund almost with all those other things.
cash.
Yeah,
don't you?
and
That's the thing.
having a cash flow means you've got that foresight, haven't you? You've got that 3 or 4 weeks maybe, or even 2 weeks that
Yep.
you think something's coming up, or your VAT bill's going out, or something's happening, or
I'm not that big for a VAT bill, but anyway.
but you know what I mean. That,
Oh, yeah.
or there's something, somebody else has put a requirement on you, and you've got time then to.
Yeah.
Yep.
Is that you're not up against it.
The other thing I'd like to ask is, if you rent a space in a shop, it's overheads paying a rental space versus paying commission.
Yeah.
How do you, on a tax thing, how do you declare it if it's a commission?
Well, that's an overhead cost.
So it's just as same as rental, as a lump
the
sum.
same. You don't call it rental, but yes, it's an overhead cost. It's a charge to you.
Okay.
And you should have, well, not quite sure which way your shop would do it, but you should have a piece of paper from the shop that says this is how much you're being charged.
Okay, so it's charged.
And
then the
goes into your
commission.
overheads. Mm.
Yeah, we're trying to work that out. Okay, that's all right. Yep.
Good. Right, anybody else? Matt, how do you, with your customers, because your projects can be quite long, can't they? So how do you manage it with your customers?
I usually take 50% upfront on any projects that is tangible, such as websites and stuff, and another 50 before the launch. So it's pretty healthy, and everyone who is on any retainer business that requires monthly marketing SEO, again, they pay at the start of the month, and once the bill is cleared, then I allocate the hours towards that project. So far I got maybe a couple of clients that being late with the payments and stuff like that. I just simply don't do anything until it's cleared. So I never had any problems with a cash flow as such.
That's great.
Your customers, sorry, Emma.
That's fine. I was just going to say that's just such a good way to run things, isn't it? Taking 50% before you start the work, and then there's just no question of getting into difficulty, really.
Yeah, I think I learned from when I was involved in the e-commerce business, selling kitchen accessories and fittings online, and also to walking in clients. Many trades were walking into and asking for the trading accounts, for 30 days accounts or for 60 days accounts, and we never offered any of that, and that didn't stop us from growing from strength to strength. Although it's kind of like maybe we should offer it and maybe we get more business out of it, but maintaining the late bills and stuff like that never kind of like appealed to us. So we never offered it. Always cash up front, like selling the product. You go into Tesco, you pay for stuff, and you're able to leave this shop with your goods. So I always try to sell it that way, because I know I wouldn't sleep if I would give things in credit, and you know I love my sleep.
I do like what you said though in your talk, Ruth, about with debtors, like giving them a ring a week before it's due, just to like, you know, touch base, make sure the invoice is all right, any queries before, because otherwise then once you get to the due date, if you start negotiating again, that's why I think it's a really good idea if your business runs in a way that you are issuing invoices. I think
it's really invaluable, and actually getting to know your customers, you know, because when in a bigger business, you'll have an accounts assistant talking to an accounts assistant. They'll get to know each other.
Yeah.
So they'll know what happens. We used to have a lady in one of our businesses that we knew her telephone. She was a credit controller like nothing. She was worth her weight in gold, this woman. And her telephone number used to pop up, and we go, oh my goodness, we're paying a bill. And we didn't have any money. We just didn't want to talk to Lucy, but. No, absolutely, ringing up, because it's then you find out that no, the invoice hasn't got to them yet, or it's still sat on somebody else's desk, or or actually they've talked to your production guy and what they want is a credit note because the goods weren't particularly well, and that hasn't filtered through to the accounts.
Yeah.
And you could have sorted the credit note out.
Exactly. But I also think, I mean, I've done credit control in the past, and I think it's also really important that because you do develop a relationship then with the accounts team, so that, you know, when they kind of become almost like your business friends, if you like, so they're always going to pay you, so that when you have that relationship. So I think any kind of credit control, it's key to do that. So yeah.
And it's very often the case in bigger departments that you put small businesses first.
Yeah.
Because you might have your own cash flow issues in a big of, you know, even the £50 million business, we every single week, all our small people went to the top and they got paid.
Yeah.
And just because we knew that, you know, it was not much money for us, frankly, in the general scheme of things, but for them it was huge. So that relationship was really critical, and you do get put to the top of the list.
Yeah, I think Martin Traynor touched on that, didn't he, Emma, in the last, when he taught the government.
Government procurement.
Yeah.
There's
so
they were making it new rules to say that all small businesses had to be paid in 30 days.
Yeah.
And they will now do that, because I think the government used to be really a bit of a culprit for not paying small businesses on time, which is very unhelpful, as we all know.
Yeah.
So yes, I just wanted to talk about pricing a bit, actually. So it's just something that Matt said about, you know, it's about being confident enough to say, well, this is how we want to work, and we may lose some work if we don't offer terms, but on the other hand, that's not what we want to do. But that's a very confident approach, and I see a lot of times in small businesses people aren't that confident. They will literally offer any terms at all to get any work, even if it means working sort of 2-3 months without getting paid. And I think it's the same with pricing. Is that people, with your example about putting prices up just 1% and pretty much reconfiguring the entire business, people in small businesses tend to, and this is also a gender thing because it is specifically women who tend to undervalue their time and underprice to a point where their business is simply never going to be successful because they haven't got the right price levers in place. So I don't know, we talk about pricing a lot, don't we? In fact, isn't our talk next week about pricing?
Yes.
In part.
Yeah, in part there is.
Perhaps it's worth everybody having a think about whether they could put their prices up. Has anybody put their prices up in the pandemic, as a result of the pandemic? You're nodding, Matt, you have. How much did you put up because of the pandemic, or just because you felt you started off too low, or competition? What was it?
Well, in my industry, it's always a case of starting really low, getting to know, you know, how getting that portfolio build up, and eventually building up to a comfortable level of where you can bring one project to the level where you can work on it for a month or even 2, and still, you know, not fighting for more business to work with, and then you can get that right balance between the quality of your service and the price. But yeah, I think general rule of thumb within my industry is to rise it all the time until you hit the ceiling, and when you hit the ceiling, add more things to it, so you can add more value to it, and then bring someone in to do it for you. So thinking about that exit plan and you know, making that scalable and profitable to the level where you can actually have a nice break, have a nice holiday, and you know, get those things done. But yeah, it's the price is always in our head. If it's a service, you are only one person in the world that is you. And you're the most valuable person for someone else who will value you. It's just a case of showing that you are that person, and not hide behind your brand. And then there is no ceiling for your pricing, really, because suddenly you realize you can only do X amount of stuff each month, and you don't want to be like a conveyor belt. Unless the business model is a conveyor belt kind of thing. So
exactly. What about you, Sue? We haven't heard from you yet this morning with regard to the treatments and things that you offer. Presumably with COVID, because of the extra cleaning in between clients, have you changed your pricing, or have you kept it the same?
I reviewed my pricing sort of first lockdown,
Right.
But to be honest, in all fairness, there isn't much extra cleaning. Yes, we now have to wear face masks, and there's been a few things that we've had to buy, and visors and things like that. But to be honest, there isn't that much extra cleaning, because it's the sort of thing. I mean, this amazes me that some people have said, "Oh, I'm not going to be doing this anymore because of all the cleaning and all the extra washing and things." There shouldn't have been extra cleaning and extra washing, because you should have been doing it like that in the first place.
That's the answer I expected to hear from you, Sue.
But I mean, something that I have done just recently, in line with my win, because I don't generally offer home visits. I don't normally do mobile, but this lady presented, she came to me, she found me, and she told me that she would need a home visit because she can't, she can hardly walk, she can't even get in her car. So I did sort of think, right, okay, I need to factor in the fact that I am going to have to lug all of my stuff with me, put it in the car, there's the traveling time, the setting up time, things like that. So I have increased my price for that, for that treatment for that lady. And as you know, I find it really hard pricing my my services anyway, for my treatments and things. But I sort of thought, well, I mean, this was before I knew the lady, because I thought she was going to say, oh no, I'm not prepared to pay that. But obviously, this lady, as you were saying, it's how much you are worth to somebody.
Yeah.
And this lady, unfortunately, I mean, she'd spoken to other therapists as well, and because of her condition, everybody had turned around and said, no, we're not going, I'm not going to touch you, I'm not going to do it. This lady is in extreme pain all of the time, and for me, it's just sort of happened that with the oncology course, which is very, very gentle, it sort of happened, she found me just at the right time, because I now have the knowledge to work with this lady and to know what she needs, obviously drawing back on my nursing background as well. It's, I don't know, it's just all happened at the right time. But I mean, I always said, well, I'm not going to do mobile because of my own health, dragging stuff about and having to put up and put down massage tables, isn't the greatest of things. But fortunately, this lady doesn't live very far away from me, so
so it surely must give you a confidence, though, now that you've got this client, to say, well, that is worth that, and that's what she's prepared to pay for it. It gives you the confidence.
It does. But interestingly, I was talking to my tutor from the oncology course yesterday, and she is in Leicestershire.
Yeah.
And she asked me what I usually charge for, because I said to her, would an oncology massage sort of, be priced alongside sort of, what I would usually charge for a full body massage. And she said, well, probably yes, it would be comparable. And she said to me, how much do you charge? So I said to her, well, £60. Where she lives, she charges 35, which is a huge difference. But again, it's a lot of it is location. Being on the Surrey-Hampshire border, people will pay, far more. And if your price, everything I've heard ever since I've been a member of Signal is, if you price too low, people are not interested. And I do consider myself to be, I mean, I've got a nursing background, I do, as you know, I do everything by the book. And first lockdown, I was almost sort of looking on the government website every single day pretty much to find out what I was allowed to do, what I wasn't going to be allowed to do. So I'm very diligent, and actually that came across also after I'd seen this lady on Wednesday. She sent me an absolutely amazing review, how she was so impressed with my sort of COVID protocol, and the fact that I had researched her condition, looked at the essential oils that would be able to, that would help her, and
that's a real win, Sue. It really is. It really is. You've done incredibly well, and you have been so diligent from the beginning with regard to all the COVID restrictions. I mean, you were telling us all on the calls what you were informing all of us. So it's really well done to you, and it pays off. So be confident and power on, and it will grow from that. It definitely will. Really good.
I think there's a good point in there about the pricing and about, if you price yourself too low, people see you as being cheap. And there's a concept in economics called a Giffen good. I don't know whether you know this, but so a Giffen good is like a potato, or a potato was always used as the example. When I was growing up and studying all this, potatoes were just potatoes. You didn't have Anya potatoes and all these sort of specialist potatoes, but you just had a potato. And you would buy, when you had very little money, you might buy more potatoes because you have to pad out your diet and so on. But when you got more money, you'd buy pasta, because actually you don't really want potatoes. You want something that you think is more sort of upmarket or a bit more delicious or whatever it is. And that's called a Giffen good. And you're quite right, Sue. Sometimes you can price yourself to a point where people will think, well, she's too cheap. She's obviously not very good. And you start losing your customers. So getting that level is quite key, isn't it?
Pressing the geographical point as well, about, because we came up against this when we moved. So I moved the hub from Farnham to Borden, and we had a lot of this, like, oh, you can't charge that in Borden. And we had that again when we opened the art galleries, like, oh, nobody in Borden's going to pay. When it's just not true. If you're selling something and there's value there, then the people will come and buy the product, and what's happening immediately in your vicinity makes no difference whatsoever, as far as I can see. So in fact, now in Borden, people do buy things at a high end and so on. It's changing, but I don't think you need to compare yourself to what other people expect in your area.
No,
just be good and be different.
Yeah, I think researching the market yourself and trying it for yourself, it's much better than just listening to some doubters that never did anything or never been successful, really, because you wouldn't hear that from anyone who is successful. Like,
no point racing to the bottom with everyone else.
No.
Can I just pass over to Sheila? Yeah, I was just going to say, I haven't heard from you yet.
Very quietly, it's not like you.
Yeah, well, as you know, I'm somebody completely different, because I'm in network marketing, Ruth. So the prices are fixed, and for me, it's all about the service I give. And I build genuine, authentic relationships first, and from there we go on to what it is that people want, and they know I will never ever let them down, because that's not the way I behave, because I know that the company, which is Forever Living, will never let me down. So I can be very confident about doing that. And because it's a set, I've got a 38% profit margin on everything that I retail. So I'm very happy, because my overheads are very low, because it's a home-based business. When people become very loyal, there's two things I do with very loyal people. Firstly, I'll say, I'll give you a discount. But when they become what I call super loyal, I say, you actually need to be buying directly from the company, because then you'll get a 30% discount. And obviously I wouldn't offer that to them, because it brings my margin right down. But they then are transferring to the company paying me, because the company has to buy directly from them. I'm a messenger for the company. That's really the bottom line.
Do you make more money in that scenario, Sheila?
Yes, I do. Because basically, obviously I do not lose touch with them, but without any of the hassle. And the other really exciting thing, this has come about with Gareth's help, actually. The one thing that Forever does, which all network marketing company will do, they'll provide you with a website. Now the website is very, very bland, because it has to be compliant and it has to be the same for everybody. But I have got my own website, and what I wanted was a direct link to my shop site. And Gareth has managed to do that, and it links in with my my own website. So you just literally type in sheilalemon.com/shop-forever, because I've got a tab in my website which says shop-forever, takes you straight to the shop. Now, Forever is global in 160 countries. I was having a, it wasn't a one-to-one, we'd already had a one-to-one, but I was having a chat with this lovely lady in America, and she saw me using one of my creams, and she said, "Oh, what's that? What's that? Oh, I like that. Oh, I want that," she goes, without even really knowing about it. And I said, go to sheilalemon.com/shop-forever, and we'll see if you can shop directly. And sure enough, I think we did a screen share to be sure, because I hadn't done it globally. She just had to change to America in the top corner, and there she was buying everything. Oh, I want this, I want this, I want and she is now a repeat customer, so she is truly loyal. And the amazing thing, funnily enough, it came in the post today, because of it's an American company, they're going to pay all the money with my profit margin onto what's called a Forever Global Pay Card, and it's like a preloaded Visa, and I can now wave another card around, which actually will attract interest, because people say, "What's that one?" and go from there. I've got to check it works in the other countries where I'm trading, because I'm in New Zealand, France, Norway, Portugal, and Spain, and Nigeria. I don't think it'll work in Nigeria. They work very differently, but if it works well like that, then we'll be promoting it much more. But I'm very different, Ruth. You know, in a way, my hands are tied. I can't change the system, and nor do I want to.
You're different but lovely, Sheila.
Thank you. Well, I don't want to change the system because I love it, and that's what makes it so flexible. So when people say, "When do you work?" I'm working all the time, because I don't feel like I'm working. It's just on my radar. How can I help?
Good terms with Forever, Sheila, or do you have to buy things up front, or how does it work?
No. In fact, they actively discourage you from holding stock. That was to stop this pyramid scheme type of thing, and also, yes, there's a slight increase now because of Brexit, and because our products come from Forever Direct in the Netherlands, because having to service so many countries, this huge place in the Netherlands actually services 90 countries. It does all of the African continent, all of Europe, all of the Middle East, but they're so quick. They are so quick. We used to say, order before midday, you'll get it the next day. We've got to make it 48 hours now, but it happens. And as long as the port doesn't hold up FedEx lorries, we do still get it in 48 hours. So there's no need. And also people who are not local, I'll order on their behalf through my own process online, and it's delivered direct. And that, interestingly enough, was something that a lot of my customers are quite elderly, have no interest in anything to do with technology. And I used to go and visit them, and we'd put the world to right, put the kettle on, put the world to right, have a lovely, good old gossip and a chat. Obviously, through COVID, that couldn't happen. And I just said, the only difference is I will not be delivering the products to you. They're coming from FedEx, but you're all from Forever, but you are going to get them in the same timescale. And they were all very well impressed, because it was. FedEx really and Forever have never let us down. No.
It's a really good business model, isn't it? It's very, very good.
Yeah.
Yeah, well done. Good.
So what you said, Ruth, doesn't apply to me.
Good. Has anybody got any further questions? We haven't heard from Gina. I know, Emma, you've sent her a message, but
Gina says that she's sorry, she's not feeling great, and she's she hasn't got any direct questions.
Okay.
Well, mine is, Ruth, I don't think I can afford to not work with you, work together, because, yeah, I'm thinking deeply, although a lot of what you said is for my future. But if I start the right way, I don't have that big star at the end. I think it's a business I would like to keep going, because I enjoy the actual operational side. But yeah, I perhaps can't afford to be without you. So I'll be in touch.
I love the idea of what you're doing, Elizabeth.
Thank you.
Horse-drawn dining, right up my street.
Yeah, it's the fun side. And also it gives me a chance to have literally a vehicle to give back, because I'm at the time of my life where I've been doing that, but I would like to do it in a different way. I will be able to, I mean, it'd be fun. It is fun, and meet different souls and go lots of places, and keep young and happy. And I'm not a person who actually has really started with horses. I am contracting for drivers and horses, but I had my 3 Clydesdales in Australia, Joe, Jock and Jad. So I will be factoring that in to have new horses and a couple of spare horses to work. But it is exciting. It's lovely for children, older people. There's a lot more things you can do with therapy horses and one thing and another. But it is exciting. Yeah. Thank you.
But the thing, isn't it, about owning your own business and being self-employed is really exciting, and that's why we do it, and we're able to follow our purpose and our vision. But it's really important to have the finances sorted and properly organized from the outset. So yeah, I think the sooner everybody gets that sorted out, the better at the beginning of your journey. So unless anyone else has got any questions. Any more questions? Matt, welcome back. Did you have a connection problem?
Yeah, all my apples fell off the tree. And I don't know what's going on today, but internet being funny, everything works against me.
Oh, I don't think that's true.
It's the rain.
It might be the rain. Well, Ruth, thank you so much for coming along and enlightening us. It's really great to hear it, as I said, in a really simplistic format, so it's not so daunting, and it makes you feel that you can actually get on and do it. It's so important. So, and some great tips in there as well. So thank you so much for your time coming along.
Remind everybody, we're going to turn all of those tips into a workbook, aren't we, for next week?
Yeah.
So it's going to be a great workbook.
So next week we've got Roland Moss coming along, and he's going to be talking to us about your goals again and about setting your pricing. It's quite a lot about pricing, his talk, just to see, and some small tweaks to your pricing, as Ruth has already gone through today. A small increase and a small look at your overheads can make a huge difference. So he's going to be talking about that as well next week. And then, of course, in week 3, we do the collaboration session, which we have workbook, where we'll be taking some of what Ruth has told us and some of what Roland's told us, put it into a workbook and really apply it to your business. So these sessions aren't, as I said, just about absorbing all the information. It's actually about putting the information into action and actually helping your business grow, which is what we're all about here at the Biz Hub. So again, thank you so much to everybody. We will see you all again next week at 9:30. Please make sure you book onto Eventbrite so that we know you're coming along, and have a great weekend. And if you haven't been to the shed yet, go and have a look at the shed and have something to eat. And definitely go and visit us in our shop at the studio at the shed and have a glass of Prosecco and have a wander around. It's really a lovely place to be. But thank you again for coming along today. And we'll see you all next week.
Yeah, thank you.
Thank you, Ruth.
Take care. Thanks very much.
Thank you, everybody, for coming. Take care.